Blog Talk Radio.
Welcome to the Nonprofit Coach with Ted Hart, the most listened to internet radio show in the nonprofit sector, dedicated to helping your charity succeed. It's no secret that combining online and offline techniques is the key to modern-day fundraising success, and practical advice is what you need. The Nonprofit Coach with Ted Hart is the perfect landing point to learn from experts around the world who provide advice you can use. Ted Hart is without a doubt one of the foremost nonprofit thought leaders, also a successful author. His books range from successful online fundraising to the use of social media and how to make your nonprofit green. Guests on the Nonprofit Coach are leaders in their field who share tips and trade secrets for nonprofit management and fundraising success. Ted lectures around the world, but now he's here for you. From the latest in charity news, technology, fundraising, and social networking, Ted and his guests help you and your organization move to greater levels of efficiency and fundraising success. This is a live call-in show. Add your voice by calling 347-324-3080. After the show, you can find all our podcasts at tedhart.com. Click on Radio. Don't forget to dial 347-324-3080. Now, welcome the host of the Nonprofit Coach, Ted Hart.
And welcome here to the latest edition of the Nonprofit Coach. Thank you for joining us today. We always have top experts here on the Nonprofit Coach, but today I am particularly welcoming and very happy to have one of the foremost legal minds in the nonprofit sector. Bruce Hopkins will be with us today when we get to page 2 experts. We always start, as the announcer said, with those folks who want to call in to join the switchboard, and make sure that you press number 1 to let us know that you would like to ask a question, and that number is 347-324-3080. You also can join us over in the chat room. I see some folks in the chat room. You can ask questions there, or if you prefer, you can just email me your questions today at tedhart@tedhart.com. As always, here on the Nonprofit Coach, we start with page 1 news. Over here on page 1 news, as always, you can join us over at tedhart.com. Click on radio links. First up on the Nonprofit Coach radio links today comes to us from socialfish.org. Social Fish has multi-channel marketing for nonprofits. This is the start of a series provided by Social Fish on various topics to help nonprofit organizations succeed online. And here are some of the facts about how fundraising and email are changing for nonprofits. On its own, email is not enough, and we've talked about that consistently here on the Nonprofit Coach. The median click-through rate for 2013 was 0.5%. Over 50% of email is now mobile, so making sure that you have that as a consideration in your planning, not only here at year-end, but for 2014. People participate because they're drawn in by stories and visuals. It's no longer just text. I'm not sure it ever was, but certainly your capacity and your ability to tell stories and present visuals is unparalleled today. So I think this article is really going to help you. And so multi-channel marketing, as we have always spoken about here on the Nonprofit Coach, we often refer to it as integration of online and offline. This article is very well done, gives you a good start, relies on data from Blackbaud's white paper on multi-channel giving. So I'm not going to obviously have time today to read through this with you, but the amount of money that's being raised online is considerable. It is up. It has now surpassed $2 billion in the United States, 14% increase in just the last year of data available. And it is the multi-channel marketing that is working. So they also go into some good details on the lifetime value of online donors versus mail. And I think that this research is really considerable because they're finding that is sometimes as much as 10 times more valuable. So check this out. I think it's a terrific go-to article for your year-end planning, but certainly for 2014. Next up here on the Nonprofit Coach, again, you can follow us along at tedhart.com. Not only will you find today's radio links, but you will find all the very best links for the nonprofit sector cataloged there, and those are links going back over the last couple of years in our archives. Next up comes to us from Forbes. Over on Forbes.com, they are sharing with us the 9 reasons why you must update your LinkedIn profile today. And, of course, here on the Nonprofit Coach, we often talk about the 6 pillars of success for nonprofit organizations. And for nonprofits in the United States, LinkedIn comes in third behind a well-designed website and a strong GuideStar.org strategy. In Canada and elsewhere around the world where there is not a strong GuideStar platform, we actually place LinkedIn as the number 2 most important thing that nonprofits can do to succeed online. So this is particularly timely over at Forbes.com for you to take a look at the fact that not only does LinkedIn have over 225 million members, but making the case for who these members are and why they are significant for nonprofit organizations, as we have often said here. But now LinkedIn profiles are showing up at the top of Google searches, so making sure that you have complete information on your Google search in some cases, particularly for professionals, can be more important than your own website. So check that out over at tedhart.com. Following the LinkedIn theme here over in the Nonprofit Coach radio show links coming to us from SlideShare. This is directly from LinkedIn itself. They are now sharing with us the very best LinkedIn company pages of 2013. Now, we picked this up over in SlideShare because they actually go through in this slideshow giving you visuals and information about the top 10 company pages. And these are going to give you really great ideas because part of the 6 pillars of success and the use of LinkedIn by nonprofit organizations is to create your own company page, your own organizational page. And part of that is how are you going to do that? What should it look like? What should you have by way of content? This link is really going to help you out quite a bit. So check this out over in the radio links at tedhart.com. And with that, it is now time for me to introduce you to our Page 2 expert. Bruce Hopkins is so important to the nonprofit sector, I almost wonder if I do need to introduce him. He has been one of our top voices and thought leaders, particularly as it comes to nonprofit law. His books, published by John Wiley & Sons, are considered to be the Bibles, if you will, for turning to information regarding nonprofit law. He specializes in the area of corporate and taxation law. Bruce Hopkins emphasizes his emphasis is on representation of nonprofit and tax-exempt organizations. His clients include charitable and educational organizations across the spectrum. There's almost no one of any substance in the nonprofit sector who has not at some point turned to Mr. Hopkins for general counsel, and others use his services as special tax and fundraising counsel. So it is really an honor and a privilege, and seems so incredibly timely for me to introduce to you and bring on to the show Bruce Hopkins. Bruce, thank you for joining us here on the Nonprofit Coach.
Well, thank you, Ted. That was a fabulous introduction. I'm really appreciate it.
Well, and I appreciate you being here. I know that this is a busy time of year for all of us, but your special area of expertise, and this is not sort of Johnny-come-lately. This is not something that you decided to pick up as a specialty. You have been a constant voice almost throughout my entire career as the go-to person, the most important author when it comes to nonprofit. So we want to thank you for your service to the nonprofit sector. But I'm going to step back a little bit before we sort of do some of the areas of expertise. We do have a link over in the radio links today to the Nonprofit Law Center. So what I wanted to do is ask you to just sort of start out with maybe something that I've missed in, but also to let us know what will people find at the Nonprofit Law Center, why is it there, and why would that be a resource?
Well, this is a website that I have created. It is really designed to have several purposes. I suppose the best reason to take a look at it is that I have posted on the site a number of current developments outlines in the fundraising area, charitable giving area, lots of different portions of the exempt organizations area, and I keep those up. I give talks around the country at different conferences on current developments and use a current developments outline at those programs. But the same material is updated constantly on the site. And there's some marketing information on there. There's information there about my books, and as you mentioned, and I do have a monthly newsletter, and I have on the website some background material about the newsletter. I've got some indexes for the newsletter on the site, and that kind of thing. So that's the principal content of the Nonprofit Law Center.
Bruce, I'm curious why a specialty in charitable nonprofit law. Isn't this just something any generalist would be able to stumble upon and do a good job, or are there things that are unique about the nonprofit sector that someone would really benefit by having a specialist like you?
Well, of course, you ask me a question like that, my answer is going to be extremely self-serving. But having said that,
be self-serving.
but you know,
I think
I've run into this. I run into this constantly over the years, and there's something about nonprofit law. We'll just use that term to cover, the tax exemption area, the fundraising area, the charitable giving area, and so forth. But there's something about nonprofit law that gives a lot of people the impression that it's simple. And this is what you were alluding to, that, what can be complicated about representing a nonprofit organization, particularly a charity? And so there's this mindset in and out of the legal community that there's not a whole lot to it, and anybody can come along and represent, competently represent a tax-exempt nonprofit organization. That may have been true a few decades ago, but frankly, that is not true today. The law has become so broad and so deep and so complicated and so intricate, particularly in the tax area, that someone who doesn't keep up with this area of the law on a regular basis can easily fall into traps and make mistakes. And I've seen this happen all too many times. In fact, I don't mean to be too immodest about it, but a fair amount of the work I get is because some other lawyer had the case first and bungled the job in some way, and then the client turns to someone else to try to resolve the situation, whether it's a legal issue with the courts or a legal issue, a dispute with the Internal Revenue Service, or a dispute between entities. The law is just extremely complex in this area, and so generalists have to be careful when they step into the role of a nonprofit lawyer.
Well, and I could not agree with you more, which is why I asked that question, not necessarily to be self-serving, but because I do think that mistake is made quite often. And one of the ways that I often explain this to people is that being a nonprofit organization, having that status, is a privilege, not a right. And so understanding the law, the obligations to secure tax deductions, to manage an organization effectively, to govern an organization effectively, is learned practice and is not something that should necessarily be done just sort of shooting from the hip.
Well, I certainly agree with that, yeah.
But to secure that because of the public trust. And I feel like that's the linchpin here that makes your work so incredibly important because, there are oftentimes people who are called upon to manage nonprofit organizations. There's not an awful lot of money, and it's certainly not to suggest that they're not doing the very best job that they can, but these are by and large probably not the highest paid people, the most skilled people, but they're very well meaning, and they want the best to be done. And one of the things, I just want to throw this out to you for you to sort of respond to, one of the things that I often hear, it makes me cringe a little bit, is that, well, as long as we're doing good work, everything will work out. And it seems to me that managing and running a good public trust nonprofit is more than that.
No, I agree with that, and you're absolutely right. I would say that I'm not going to come up with a particular percentage, but certainly the vast majority of individuals that are running nonprofits, particularly charities, are well-intentioned, well-meaning, honest, but that's not enough, as you've sort of alluded to, because there's so much law out there now, both at the federal level and the state level, that these organizations are expected to adhere to, and some of it's counterintuitive. I mean, some of it you don't even think about. So a lot of people think, well, this is the right answer to the question, when it turns out the right answer to the question is totally different. So I consider myself a consultant, really. But it's in the law area, obviously from a law perspective, and that's the bulk of my practice. I am not doing much litigation anymore, and so most of what I do is literally consulting and helping board members and officers and executives of nonprofit organizations figure out what they should do. It's usually in connection with program activity, but sometimes it's investments and sometimes it's advocacy, and more these days, governance, and certainly in the area of charitable giving and fundraising. And so all those areas are greatly influenced, obviously, these days by the law. And I consider that my job, is to sort of steer people, guide people, help people get to where they want to be, where they should be, but get there without violating some law.
Right, exactly. And you just gave quite an extensive list of areas that every nonprofit, regardless of size, needs to be concerned about, whether or not. And I think you're absolutely right in pointing out that in all the consultation that I've provided, where I've run across areas that I felt were very certainly legal issues for that nonprofit. I'm not an attorney myself, but I've been doing this for 25 plus years, so I recognize where there are problems. It is not because they were intentionally trying to skirt the law. It was that they simply did not know what best practices were. They had no idea that there would be laws governing a certain area. And I think this is where the value of a show like this comes in, but certainly the value of your books and of your practice is to point out the fact that not that we have to paint this as overly complex, but ignorance of the law is not a defense.
Unfortunately, that is true, and I feel particularly fortunate because I do love to practice law, but I must say I also love to write, and so it's given me with these books, and a lot of them are supplemented, so they're annually updated, an opportunity. And again, I'm not trying to peddle the books, but it's given me an opportunity to summarize the law in these various areas and try to get it in the hands, particularly of organizations that may be relatively small and can't afford, or at least they think they can't afford, legal counsel. And again, I'm not trying to practice law through books, but I am trying to get the information out. And I do that through the speeches as well, the newsletter, but trying to get the information out so that organizations, even those that have lawyers that are relatively small, modest size can have a resource to understand what the law is and where it's going. Because, where it's going is just as important to me anyway as to what the law is, because the law in this area, and I'm not saying the law in other areas isn't, but the law in this area is so dynamic. I mean, there's so much happening. Almost every day there's a legal development of some sort in the nonprofit area. And trying to keep abreast of all this and get the word out, it's a big task, and others are doing it as well. But there really is just a tremendous amount of activity and a lot going on in the sector. And again, someone who's only dabbling in the field, in my view, can't possibly be on top of it. It's just those days are gone.
Well, and I think part of being a professional, particularly when you're running or managing a nonprofit organization, is knowing where the experts are that you can turn to when you are not as knowledgeable in an area as you would like. What we're going to do, Bruce, is we're going to take just a really quick station break here. When we come back, what I'd like you to do is walk us through some of the more common errors and mistakes that you see nonprofits making that you think are avoidable if they were more knowledgeable in this area of nonprofit law. And we'll be right back after this break. Get your pencils out and grab your calendar. I just want to make note of our schedule here on the Nonprofit Coach. As always, our holiday show, the last show of the calendar year, belongs to the absolutely incredible Kay Sprinkle Grace. She's actually booked out for the next couple of years, and that show happens next week on December 17th. So don't miss that show at 12 noon Eastern. Kay Sprinkle Grace will be here to help you plan for a successful 2014. We then go on our annual holiday hiatus, and the show will then be in podcast form. You can always find all of our hundreds of free podcasts of the Nonprofit Coach at tedhart.com. Just click on radio. We will be coming back live for our regular weekly show on January 14th. January 14th, I'm extremely pleased to be able to welcome here to the Nonprofit Coach. Claire McDowell will be with us. She is an online communications consultant specializing in social media communications, and she has been working with Canadian, North American nonprofit organizations. Having been from Scotland, she has now moved and is headquartered in Toronto. So that's going to be a terrific show. She's the founder of Be Good, Be Social in Toronto, and that is Claire McDowell, who's going to be with us January 14th, bringing us back into the new year. So that is the program taking you through the holiday hiatus, but we're going to head back over live with Bruce Hopkins, the foremost expert in nonprofit law.
Remember, our podcasts and archives are always available 24 hours a day at tedhart.com. Click on Radio Links. If you're listening live today, the phone lines are open. Call in and ask a question by dialing 347-324-3080. Now, back to the Nonprofit Coach with Ted Hart.
And we're back here live with Bruce Hopkins. So, Bruce, what are some of the biggest mistakes that you see, the more common mistakes that really could be avoided if nonprofit managers were more familiar with the law?
Okay, of course, there's so many items that could be on a list like this that we don't have time to go through all of them, but I can certainly give you maybe my top 6 or 7 suggestions in this area. And of course, this is going to vary, because when we talk about nonprofit organizations, if you look at it from a tax standpoint, a tax exemption standpoint, they're probably 70-plus types of entities. So in a way, it's hard to generalize. But I think the place to begin here is with governance. Governance is probably the hottest issue of the day in the nonprofit area. So when an organization is starting out, or for that matter, been around for a while and maybe thinking about restructuring in some way. The whole matter of board composition, the relationship of the board to the officers, and the compensation structure, and all of that should be looked at. The Internal Revenue Service is on a big campaign right now. I frankly think they're making a lot of mistakes in the process, but they're on a big campaign right now to deny exemption to organizations that have either what they call a small board, and that can vary, or a related board on different grounds, usually a private benefit rationale. So organizations that are, particularly those that are starting out, need to worry about that. There are ways to go up against the IRS and fight back on this, but if it's a small organization, maybe not represented by counsel, and it wants to have a small board or related board, it's likely to have a lot of problems with the IRS in terms of getting its tax exemption recognized. So I would say governance is a big
factor. Well, talk to us a little bit more about how small is too small and how close is too close.
Well, there's no real law in this area. This is not a subject at the federal level where there's any law at all. Most of this traditionally has been a subject of state law. Most state statutes, state corporate law statutes applicable to nonprofit organizations mandate at least 3 directors. But there are some states where you can have 1. The IRS does not like to see boards that are quote-unquote small, but there's no particular number here. The rulings that I've seen range from, say, 1 to 5. I think if you get past 5, the issue of board size probably goes away. But the IRS has this view that, and this is particularly prevalent with respect to entities that are trying to get themselves classified as charities. And by charity, I mean charity, educational, religious, scientific, that kind of thing. The IRS has this view that there should be a quote-unquote independent board, which is to say a board that is comprised of unrelated individuals who don't have any private interest with respect to each other or with respect to the organization. And that simply, frankly, is not the law. But that's the culture in the IRS right now. And so an organization starting out with a board that's small within that range, say 1 to 4, 1 to 5, has a problem, has a potential problem, and the problem gets exacerbated if there are people on the board who are related,
right,
by blood or by business.
Yeah, I want to explore that a little bit more with you in terms of, it's the IRS's perspective, it's their sort of interpretation of what they view as good governance, but good independent professionals would come down on the same side of that. It concerns me when I see a nonprofit organization, again, going back to the public trust standard of why that nonprofit exists is not for public or for private individual satisfaction of avoiding taxes. But when I see a nonprofit where, dad is the president and mom's a vice president, sister is a treasurer, and then they have 2 close family friends as independent board members, I have to ask, is that truly a public charity, or is that someone trying to skirt the law for tax purposes and drawing salaries off from a nonprofit?
Well, there's no question there's a potential for abuse when you have that kind of a fact situation, but that as a matter of law, at least as of today, is not prohibited, despite what the IRS says. The case law, and there's not much on this, but the case law that there is tells us that when you have a board like that, a small board, a related board, what's called for is greater scrutiny, more disclosure, more transparency, more candor when relating to the regulators, whether it be the Attorney General or the IRS, than would be the case if it's an organization with a larger board. But the real focus, in my judgment, is not on the board. It's what the organization is doing. And there are a lot of people out there who set up a nonprofit organization, and they want to do good, but at the same time they want to operate it. And I've seen too many situations where someone started a nonprofit and they worked on it real hard to build it up. 5 years, 10 years go by, and they add people to the board, and next thing you know, the board turns on them and they get expelled, and the organization goes off and does something else. So there's something intrinsic or inherent in the human nature when you start a nonprofit to want to maintain control over it so you can continue to operate it and have it do what you want it to do. And so there's a clash there between that concept and the one that you were articulating about the ideal of a board, comprised of disinterested, independent parties. It's great in theory, but in practice, it doesn't always work that way. And you take a typical private foundation, for example, where the IRS, by the way, doesn't bother to apply this body of law. The board is often relatively small and comprised only of family members, and it works out just fine. So there's nothing inherent in a small board or a related board that's bad. It's just that the potential for abuse is greater, and the case law teaches, as I said, that there should be greater scrutiny and greater oversight by the regulators.
I think this issue of governance is far overlooked in terms of best practices, and I think it's interesting to overlay on that the issue of the almost lack of real case law in this area. But I do want to keep track of our time, and I want to move on to other areas of common either misconception about the law or misuse.
Okay. Well, another one, particularly this is applicable to organizations that are just starting out, is whether to apply to the Internal Revenue Service for recognition of exemption. Now, in some cases, like with respect to most charities, the application process is mandatory. But for other organizations, it isn't. And so one of the threshold decisions that has to be made is whether or not to go to the IRS and seek a ruling. And again, if it's a small entity, it doesn't have a lot of money, doesn't have legal counsel, it's tempting to not go through the process if you don't have to, because then you don't have to incur the cost and the time and the potential of getting tangled up with the IRS, because a lot of these filings are made by organizations that either are not represented by counsel or they're represented, but the counsel is not really that competent in the field, and so things are said and done that get the organization crosswise with the IRS. So that whole area needs to be given considerable thought, in my judgment, when an organization is starting out. Another area that is a major one, a lot of confusion, and this is in the charitable area, is the entity going to be a private foundation or is it going to be a public charity? And
help us understand those two.
Well, a private foundation is a charity that essentially is created by a family or by an individual, in some cases by a company, that is funded only by that source. Whereas a public charity, there are different kinds of public charities, but the typical public charity is what we call a publicly supported charity, which engages in fundraising and gets charitable gifts and grants from a fairly diverse and large base. And other institutions are automatically public charities like schools and hospitals and churches and things like that. But most organizations that are started up are not schools or hospitals, but they're organizations that have a fundraising program, and they go out and solicit and receive contributions from the public. And there are tests as to how much money has to be raised on an ongoing basis to qualify. And this has a huge impact, though, on the law that's applicable to the entity. It has a big impact on the charitable giving rules, because the amount of the charitable deduction and the type of the charitable deduction will vary depending on whether the organization is public or private. And so the organization at the outset needs to understand these, or should understand these rules and try to plan to fit into the category that's most suitable for it. And frankly, that's another area where a lawyer can, who is knowledgeable about this area, can help when the organization is being designed at the outset, or things change. I mean, I've seen many situations where an organization starts out as one type, and then for one reason or another, it morphs into another type. So, guidance as to whether or not this entity is public or private, and then if it's public, which category of public charity is complicated, but it's really important. And most charities in this country are public charities. I mean, you know, nobody knows how many charities there are, but there are probably 2 or 3, 4 million of them. Private foundations number maybe 80 to 85,000. So they're a small part of the sector. They're important, but there's from a numbers standpoint, they're a relatively small part of the sector. So that's another area where I see a lot of confusion, misunderstanding, and making of mistakes. Another area that, and the IRS started to get really focused in this area at the beginning of this year, but then with the scandal as part of the application processing that unfolded in May, and things have gone badly for the IRS ever since, and so their initiatives have slowed. But a lot of focus on whether an activity is related or unrelated. You know, related to the organization's exempt purpose or unrelated. And there are a lot of
this is where you potentially get into unrelated business income tax. Exactly,
right. That's exactly right, because the income that is derived from an activity that is not related is supposed to be taxed. The net income is supposed to be taxed. But it's one thing, and it's not easy always, to look at a particular activity and say, this is related, this is unrelated. And by the way, this is often a legal issue because there's a lot of case law, a lot of IRS rulings. And so an organization can get advice, legal advice, as to whether a particular undertaking is going to be considered related or unrelated. But even once you get past that decision, there are lots of issues about what expenses are deductible, what expenses are allocable to the unrelated activity and to the related activity, and you get into joint costs and allocation between activities, because sometimes a facility is used for a related purpose and sometimes it's used for an unrelated purpose. And sometimes people think all they're doing is engaging in investment activity when in fact it's more than that, and it turns out that it's an unrelated business. So that is a big area and often gets overlooked because nonprofit managers tend to think that just about anything a nonprofit does, as long as the money is being ultimately applied to the exempt purpose, is a related activity, and that simply is not true. Another area that is relatively new is the whole matter of the reporting. You know, the larger organizations, of course, file a Form 990. The smaller ones, either a 990N, the postcard, or a 990EZ, if it's the more modest size organization. And up until recently, organizations didn't think much about the reporting or the manifestation of the reporting and the consequences of the reporting. Today, particularly with the 990, which, as you all know, got revised and started to be in a totally different format beginning with the 2008 return, is quite complicated. And a lot of questions, very pressing questions, very pointed questions. And in my judgment...
And Bruce, I just wanted to, and one of those areas of change relates back to a topic you squarely put on the table today, and that's the area of governance.
No question. Absolutely right. Part 6 of the 990, that's what it focuses on. And that's a good example of what I was about to say. To me, the Form 990 has become so important that organizations, when they decide what they're going to do and how they're going to do whatever it is they've decided to do, should always be thinking about how they're going to report it on the 990. Because the 990, I mean, a lot of people don't like it because they think it's too burdensome. They think it's overreaching on the part of the government. But I'll tell you, it is a work of art. And there's not much in relation to the Form 990 that's not covered. And so whether it's a joint venture or use of a subsidiary or the unrelated income rules or public charity status or fundraising, whatever it may be, it all gets reflected. It all gets manifested on the 990. And so I keep the 990 in the back of my mind all the time when advising clients on whatever the issue is, because I'm concerned about how it's going to look when the time comes to report the activity to the Internal Revenue Service. A couple of other areas here I think I probably ought to mention. Charitable giving.
Can I just interrupt there just for a second? Because I really appreciate the fact that you've put squarely the importance of the 990, because as I'm often sharing with my listeners here, it's often overlooked. It's treated as a tax return, often completed by the auditor and just signed off by the chief executive. But it's far more important than that. It is your most public document. It's going to be posted online. You're required by law to provide a copy to anyone who may request it, along with your governing documents. And I think these are things that most nonprofits are not aware of, the importance of spending time wordsmithing and preparing that 990 to speak to who you are.
Oh, I agree completely. I mean, it's really an extraordinary document. Whether you like it or not, it is an extraordinary document, and it covers just everything a nonprofit is doing. And you used a very important word there, Ted, when you talked about wordsmithing, because the general attitude about the return is not that it's simply some tax return, but that it's basically about numbers. And that used to be true, but it's not true anymore. And the use of words today in preparing the Form 990 is just as important, if not more important, than what the numbers are on a particular line. And lawyers are better at words than numbers. And so, again, without making it sound self-serving to the legal community, the role of lawyers in relation to the preparation of the 990 has changed dramatically. I mean, 10 years ago, I really didn't spend that much time on 990s, but today, review and in some cases helping to prepare Form 990 is just an integral part of what I do on an ongoing basis. So it really has transformed, in my practice anyway, it's transformed nonprofit law practice because the form is so significant.
And this is one of the contributions that GuideStar has made to the industry and making them so much more accessible for donors, for regulators in our community.
I agree with that. If I can do two more on the list that you requested.
Oh, I want you to keep going. This is amazing.
Well, I'll tell you, the whole area of charitable giving. This sort of gets back to the point you were making at the very beginning of the program, where you were saying, well, nonprofit law is simple. Anybody can do it. Well, that's true in the minds of many from a nonprofit law standpoint. But when you get into the area of charitable giving, that attitude is even more prevalent, because people can say, look, this is, charitable giving. You're making a contribution to a charity. How complicated can that be? Well, unfortunately for everybody else but the lawyers and accountants, it's become extraordinarily complicated. And mistakes are made all the time by charities, either by advising a donor, prospective donor, that a particular gift is deductible when it turns out that it isn't, or in the way the charity itself handles the gift and reports the gift after it comes in. And we can talk about a lot of aspects of this, but you know, people come to charities and want to give the charity stock that's issued by what we call an S corporation, and the charity accepts the stock and doesn't realize that all the income from it is automatically unrelated business income because no one ever told them. Or someone comes to a charity and says, well, we want to give you a gift of property, and we've already lined up a buyer, so all you have to do is accept the gift, and then you can turn around and sell it to the buyer. Well, the charity is participating in what we call a step transaction, and that kind of thing affects the deduction taken by the donor. And then you get back to the 990. You have Schedule M, which is the part of the 990 that focuses on gifts of property, what we call non-cash gifts. And the reporting is extensive, and there are all kinds of issues there. I think probably the prevalent one is, should a charity have a gift acceptance policy? A lot of charities don't think about it. They just accept every gift that comes along, and sometimes that's not a wise practice, and so you've got that aspect of it. So there are just a lot of traps in the whole area of charitable giving. One of my favorites is with auctions. I've always thought that if I had the time, I think I could write a whole book just on charity auctions and the legal problems associated with it, but I'm not sure there'd be a great market for a book like that. But there is a great area where charities tell donors that they're going to get a charitable deduction for something when the deduction is not available. And, of course, the person claims the deduction, then they get audited, and then they blame the charity. And good examples of that are contributions of services, contributions of use of property. There's no deduction for those kinds of things. And then there are really intricate rules when people are giving certain kinds of property, like automobiles and boats and airplanes and intellectual property and things of that sort. And there have been some recent statutory law changes and changes in the law dealing with fractional interest in gifts of art and that kind of thing. So, again, charities just assume if it's a gift, they should take it. If it's a gift, it's fully deductible by the donor. And frankly, that all too frequently is not true. And then
I think,
go ahead.
Well, I was just going to say, and sometimes where charities get into a problem there is where they have a donor, maybe a particularly influential donor, who sort of is instructing them on how they should be receipted and what they should be getting, and that puts the charity in a very awkward position because they're reliant on that. This is a little bit of undue influence on the part of the donor. And a charity can feel that it's in a difficult position. So understanding the law and understanding what you're outlining here gives them the backdrop to say, you know, I'm very sorry, but that's not allowed. It's not that I'm being a bad guy here and saying you can't have it. It's nobody under those circumstances can have that tax deduction.
Yeah, that's exactly right. And frankly, that is the main purpose of a gift acceptance policy, is to put the development person in a position that's not awkward with respect to an influential donor, because if the kind of gift that is being contemplated is addressed by the policy, the development person can say, look, this is the policy the board adopted. You're not being singled out, as you put it. This is the rule that the board has adopted, and we're just applying it uniformly. So those policies are extremely important.
So back to auctions in general. Give us the rule on if something is available for auction. I'm told it's worth $50, and I bid $100. I pay $100 for it. What is deductible? Well,
there are two schools of thought on that one, Ted. And here are the choices. If you assume that the item is worth $50 and the person ends up paying $100 for it, there's two schools of thought, as I said. One is that that $50 is deductible because $50 of the $100 is the purchase price for the item, and the other $50 is a gift, which I think legally is probably the correct answer.
That's how I would normally advise it. But can you just expand on what you just said? Because I think this is such an important distinction here, the difference between a gift and a tax-deductible donation.
Well, it's not so much a difference between the concept of a transaction at an auction, when someone is bidding on an item of property, they're negotiating a purchase. And so if the property has a value of $50 and they pay $50 for it, they've purchased the property. And there's no gift element at all. But if the property is worth $50 and they pay $100 for it, as you were hypothesizing, then the argument is, well, there was a $50 purchase and there was a $50 gift, which I happen to think is the correct analysis.
Yeah, I mean, I would agree. But you could potentially, I think what I was alluding to is you could potentially suggest that the $50 is a gift. You're giving it away. You're gifting it. But only 50. I guess 50-50 makes it say it's $50 value and $75 gift, so we can distinguish between the two. The $50 is a gift. I'm gifting that to you, but because I received value equivalent to that, that would not be tax deductible. But potentially, under the scenario, you're suggesting that maybe the $25 of that $75 might be because that is potentially a charitable gift over and above the fair market value.
Right. The only problem with that analysis is that the IRS takes the position, not always, but sometimes, that for a transaction to entail a gift, there has to be donative intent. And they say that in the context of an auction, the market in which the property is being transferred is the auction itself. Mm-hmm. And that people are motivated by incentives that have nothing to do with charity. It may be peer pressure, they may be posturing themselves to outbid their neighbor. I mean, who knows what motivates people to do what they do at an auction? Particularly, as I'm fond of saying, the key ingredient to a successful charity auction is at least 2 cash bars. And as the evening wears on, that can have an impact on the individual's thinking. And so charity, donative intent, may be the farthest thing from the individual's mind.
This is not definitive on the IRS's. Are you suggesting that they may take the position that if it is an auction, the very nature of the auction is that there would be no charitable deductions allowed because you've negotiated a new fair market value because you purchased it in an open market?
Yeah, I don't think the IRS is going to go so far as to say that's the law in all cases, but I think that's their general attitude. The mindset is that the auction is the market sets the price, and what the bidding price was, the winning bid price was the fair market value set at the time in that particular marketplace. Now, there may be an extreme situation where someone bids $10,000 for a $500 item, and then you can argue there's clearly a gift.
Right.
Frankly, the donor would be far better off making it 2 transactions and paying the fair value for the item and then making a separate contribution to the to the charity. But here's the problem, Ted. Here, if we got time to mention this.
Oh, sure.
Remember, if the gift amount is $250 or more, the only way the donor can properly claim the deduction is to get a substantiation document from the charity saying that the donor made the gift. And my experience is that charities, in a situation like this, where the donor is trying to argue that part of the bidding price at an auction is a gift, the charity's not so sure, because they get penalized if they issue a substantiation document and it's not accurate. So some charities are reluctant to issue the substantiation acknowledgement where the gift is made in the context of an auction. So you put the charity in an awkward spot when you're forcing the charity, or trying to force the charity to stipulate that the transaction did in fact include a gift, because the smart development person may know that that may not be true at all. So that's a big problem.
So what about the ticket price for entrance to dinner? Help us out with that one.
Well, those are not deductible. They may be deductible as a business expense, but they're certainly not deductible as a charitable contribution. And under there's actually a statute now that deals with this. In a special event like that, like a dinner or a dance or whatever, the charity is supposed to ascertain what the fair value of the event is and notify the person. Let's call the person a patron, not a donor in this context, to notify the patron that of the amount they paid, X amount is not deductible. So if the ticket is $200 and the charity has ascertained that the value of the event, whether it's the entertainment and the food and drink and all of that, is $150, well, then the person can deduct the $50 as a gift, but they can't deduct the rest. So
right.
a charity is supposed to make that. Yeah, charity is supposed to make that good faith estimate and provide the information to the donor.
And always good practice to document the method that you used or how you came to that number.
Well, that's true from the charity's point of view. And here's another problem. What happens to the charity where the caterer donates the dinner? Well, the charity says, well, the cost to us was nothing, so you can deduct the full amount. Well, that's not true. Yeah. It's the fair value to the donor, and whether the charity got it at a discount or not is irrelevant. One other item on my list here before we, I guess, run out of time is in the...
We're almost out of time. We've got 2 minutes left.
Okay, well, just in the fundraising area, I see too many charities that are out there raising money by direct mail or, as you were talking about, through the social media, through websites and so forth, and they are not registering in the states where they are fundraising. Almost every state has something called the Charitable Solicitation Act, and the charity is supposed to register pursuant to it in every state in which it's fundraising, and a lot of charities are simply not complying with these rules. Now, the enforcement level is not high, so charities are getting away with it. In some cases, it's inadvertent. But if you do get tangled up with the Attorney General of a particular state, it can be a problem. So charities need to be well advised as to their state registration requirements.
Is it currently 40 states out of the 50 that have specific registration requirements on an annual basis?
I think it's 46. It's 46. There's only 4 or 5 left that don't. Yeah. Now, not all of them are real extensive. There's about 2/3 of them that are particularly sizable. So there are some states where this is a very extensive body of law, but you can't cherry pick. If the fundraising is occurring in a particular state, then the law of that state has to be complied with.
Bruce, I'm going to quickly ask you to give everybody your phone number or how they can reach you, because we're going to wrap up, and you've got to come back on the show. This is one of the best shows we've ever had.
Well, you're very kind. I've enjoyed it. So all you have to do is invite me, Ted, and I will be back.
You are
probably the easiest way to reach me is by email. So that would be bhopkins at, and then Polsinelli, POLSINELLI.com.
Terrific. Bruce Hopkins, happy holidays. Thank you for being our outstanding guest here on the Nonprofit Coach. We'll be back live next Tuesday, December 17th, to wrap up the year with K. Sprinkle Grace. Catch you on Tuesday.
You've been listening to the Nonprofit Coach Radio Show with Ted Hart. Tell all your friends to check out our production schedule and download our iPod and iPad-friendly podcast at tedhart.com. Thanks for listening to the Nonprofit Coach.
When it comes to cleaning your house, Who doesn't wish un galán with a trust fund swept in and passed them up to your evil stepmom like in the telenovelas? Hola, it's Chiquis here, and although life isn't always like in the soap operas, Fabuloso does bring a clean that's always over the top. Get your home dramatically clean anytime you like, without any evil mama drama. Just long-lasting lavender freshness. That's Fabuloso, taking the drama out of any mess.
Fabuloso's 2x concentrated formula provides 2 times more active ingredients versus non-concentrated Fabuloso Original. Use as directed.
Hey, it's Ryan Seacrest. Life comes at you fast, which is why it's important to find some time to relax. A little you time. Enter Chumba Casino. With no download required, you can jump on anytime, anywhere for the chance to redeem some serious prizes. So treat yourself with Chumba Casino and play over 100 online casino-style games, all for free. Go to ChumbaCasino.com to collect your free welcome bonus. Sponsored by Chumba Casino. No purchase necessary. VGW Group. Void where prohibited by law. 18 plus terms and conditions apply.